Welcome everyone, Simon here from the Wales of Wall Street. Hope you're doing fantastically well wherever you are in the world. Guys, we're going to go straight into this topic video. Today's asset is focused on Quant QNT on the exchange. One of our favorite projects, technologies, corporations, whatever you want to call it, on this channel. For me, this is one of the absolute diamonds and gems of a crypto asset that you can hold right now, and for sure is going to have a gigantic future, both valuation wise and certainly from its technological advancement aspects as well. So as you remember, the last sort of many videos that we've been doing have also been related around this whole CBDC conversation. This is going to heat up, in my opinion, over the next year and a half, particularly leading up to the likes of 2025, when we have the new integration of the RTGS system around the world, which also incorporates the ISO 20022 compliance messaging standardization for the finance across the world as well. Every bank in the UK is very much adhering to this piloting system right now. You can go on pretty much any of your banks that you have or have your money in right now, go on their websites, type in these kind of keywords, and you will find all sorts of information on there. But one of the critical things is November 2025, when this whole entire system is supposedly supposed to be fully integrated. So let's see how that goes. But let's swing back to the topic right now, which relates heavily to Quant as well. There's no secret. Quant continuously talk about CBDCs, especially the founder, of course, Gilbert, who talked about this quite significantly in the latter stages of last year in a lot of his conferences and a lot of the marketing that they did out of Quant in that period of time. But this particular recent topic is Quant retweeting from the Digital Pound Foundation, who are very much behind trying to create a formulation of regulation and legislation towards CBDCs, and in particular here in the UK, the digital pound. Now, this is pretty much something that's being repeated across the world. Multiple countries and regions are looking into the systematic approach of CBDCs, how these will interlace and link with each other on a cross-border perspective. And that's why we've got all the things like Project Jura, Project Dunbar, via the BIS, the big financial criteria system and organization that's very much coordinating a lot of this. We'll go into that a bit more detail because we will look at the focus on Project Roslyn, which is very heavily related to what we're talking about in this video here. So I want to do a quick reminder. Before Sunak was Prime Minister, way back, even in 2021, they created the London Innovation Hub, and this was to try and advance technology in general in the UK, but have a very specific focus around cryptography and Web3 application and utility in the infrastructure of the UK, and obviously then broaden that horizon towards the rest of Europe and the rest of the world coherently. So if you see here, Rishi Sunak sets out a plan to turn UK into a global hub for crypto. This is very much off the back of the thing I just mentioned, encouraging kind of a UK tax format for crypto moving forward, but also utilizing the technological innovation hub that we have in London to get the best of the best of people, developers, we could argue scientists in some ways, to make sure that the UK was one of the leading countries in the world when it comes to cryptography and the utilization of crypto, i.e. CBDCs and other infrastructure formats for this as well. So we've got that kind of scale and that time frame. This article in particular was from April last year. This was before Sunak became Prime Minister. And if you know from my original videos or my early videos, I said Sunak will be Prime Minister. He's part of the leadership program, or the graduate program of the World Economic Forum, as are many of the other European leaders and world leaders right now. Coming into play, the chess pieces are in play. And wasn't it very convenient that shortly after Sunak becomes the Prime Minister, the Bank of England represented the proof of concept application, which we covered a couple of months ago. This was where companies were invited to create the framework and infrastructure for a digital wallet that can hold the digital pound, i.e. the UK's version of the CBDC. I'm not going to go into full detail of that. You can watch the original video that I did about that. There's a massive length of information on here that the criteria, if you like, that was required for these companies to adhere to become shortlisted. And after all of this, 20 completed applications, 9 SMEs, small medium enterprises, and 11 large companies took part in this and applied to this. So we've gone past that stage now, and we're now in this. The latest start date, 16th of January, which is pretty much next week, for these companies to start. And there's a 5-month section here for them to complete this. Now, we know that Quant has a very, very big interest in the UK CBDC system. I don't really know fully right now, their observations of like how interlaced they are with this framework process and the selective process. But I could probably imagine that as part of the judging panel, they would probably be on this because of the service that they can provide for the Oracle aspect, the API aspect. Interoperability specifically is something very interesting to me when it comes to Quant, and it's just general magnitude and the ability to power this kind of thing. So that aside, I'm not going to read every single question. This is mental. So a total of 20 companies submitted applications for the 200,000 5-month project, with almost all handing in a series of questions before Christmas. And literally every single question, 70 questions that all the applicants have asked collectively, are listed in this. And it's quite staggering, really, because of the amount of different questions that were asked. And it was very much people asking about questions about API. Was it integrating things like KYC at this stage? And it's very apparent throughout these questions and answers from the Bank of England that the Bank of England is very much asking for this to be done from scratch, a learning curve and a learning process that will end in 5 months' time, with a potential option to extend it by 1 month. And the only reason I could assume they would extend it by a month to certain applicants is if they've got a really solid application and they think, actually, we need a bit longer to really define this. That might be where they get the extra month from. But I can imagine that all of these companies are probably trying to do this very quickly indeed. So do take your time to look through this. I'll leave the link in the description below. I'd be very interested if there's some developers out there that could perhaps help with some of these questions and answers and really define in the comments like what some of these might mean. There's a lot of talk here about what kind of tech stacks will be used in the background, what kind of technology and what kind of development infrastructure will we be putting in place. And my limitations, I'll be honest with some of that. I know very much a lot about the wordings of like Java and Node.js, etc. But the full intricate detail would be really interesting to get people's perspectives on from a developer's point of view on this whole entire infrastructure and application process, because that would be really good for, I think, the rest of the audience, and particularly for myself as well. I always love to learn from different areas and different people all the time. But yeah, look at this. On the timing, can you confirm that the 5 months of the project are dedicated to build only? What are your expectations after this period? Are you expecting support / running of the system? I'm assuming that means 5 months for building and testing. So this, in my mindset, would suggest that around April or May time, we will have the conclusion of the applicants which have started from next week, and being concluded in both their building and their testing mechanism as well. Now, I would anticipate that there would probably be a lengthy structure after that, whether it be 6 months, 12 months, whatever it might be. It'd be very convenient if it then links into the November 2025 deadlines of all the other financial infrastructures around the world. But from my point of view, is that this is getting really exciting. So let's see what this develops. But my point being about the whole aspect of Quant is its integration with the interest on it, and the fact that they constantly talk about CBDC projects and the integration perspectives of this as well. And they're very heavily obviously involved in the board memberships of the likes of Digital Pound Foundation and vice versa. And of course, both of those critical components of Quant and Digital Pound Foundation are working with the likes of Bank of England to ensure that this new structure in place is absolutely phenomenal, and probably arguably market leading in terms of world domination, or certainly leading aspects of how CBDCs will work. framework wise around the world. The other points to mention here, which comes from some of the answers that I saw from Bank of England, they refer to this digital outcomes and specialists 5 legal documents. And this is very much a framework. So digital outcomes and specialists 5 framework award form. I've downloaded both of them. I've read through them, through all of these documents. This one in particular is very interesting because it does break down a lot of the framework of how people are chosen, why would they be chosen, and all the things that they're looking to integrate moving forward. So again, I'm going to put that link in the description. And if anyone out there wants to take a look at that and also leave comments about any particular things they want to pull out or have an interest in, we'll try and do a review video on this further detail as well moving forward. But the last thing before we go into Quant in more detail, again, published 12th of March 2020. This is again another link I will leave in the description. Bank of England. And this is very much interesting information around the electronic form of central bank money, i.e. CBDCs, and how this will take its part in the history of humanity, in the history of finance. This has never been done before. It's never been seen before or integrated before, obviously. And we're now on the pivot, guys. And this is why I'm excited about Quant. I'm excited about the likes of Hedera, Algorand, Casper, all of these kind of projects now that are really heavily involved in the interlacing of how cross-border payments will work, interoperability will work, cloud, Oracle, you name it, AI, IoT, all of this stuff coming together. This is why I have a very big interest in specific assets within my portfolio. I've tried to remove as many of the risky ones as possible now, and all the the rubbish ones, and just purely focus on the full utility. I mean, when I mean utility, I mean actual real world usage. And something significant, especially in the finance market. We're talking about trillions upon trillions of dollars. The RTGS system alone is something like £760 billion worth per day transacted. And who's going to be powering this? It's going to be a multitude of them, but blockchain is going to be one of the significant technologies behind all of it. And that's why I'm so passionate and excited about it, because we're on the brink of something very, very exciting, but also potentially worrying in some capacities if it's in the wrong hands or if it's used in the wrong way. But we can for sure maybe agree that it's interesting either way. And arguably, we want to make money off it, right, in some capacity. So let me know what you think about all that in the comments below. Check this out as well. If you haven't heard about all these different projects, very interesting indeed. But BIS, Project Rosalind, is very much, again, about the application and programming interface to distribute retail CBDC. This is for us, guys. This is not talking about institutional level. This is talking about a CBDC system for everyone around the world, even people who have never been unbankable. There's something like a crazy number, something like, I think it's like 2 billion people or something are unbankable in the world, and they will now become bankable and onto this system, arguably creating more diversity and more fairness and equality. But let's see who takes control of this and how it actually operates moving forward. So I'm very interested to see that incorporation and development. So wrapping it back round to Quant, as I said, very big player in all of this for sure. But let's take a look at the price point of Quant. Okay, so we're on $113 right now as of recording. 114, sorry. Literally, as I've switched over to this sheet file, it's gone up $0.50 or something. But as you see in the history of Quant, and I want to make this very specifically clear for those that haven't seen any of the previous Quant videos before or not. My point being, about any of the price points that I've tried to get at these lower regions, I still have buy orders back here at $87. I still have them even way back down at these lower regions that we saw a while back here in June 2022. And the reasoning behind that, just to reiterate for those that haven't seen the previous videos, is that we look at the historic data of trend lines and movements of Quant on the chart, and you can see there's a lot of big breaked patterns here. So obviously, as pretty much with every asset last year, 2 years ago, I can't believe I can say this, it's mental, isn't it? So in 2021, we had this huge rise up from these kind of price points around just sub $100, all the way up, guys, to a fabulous something like $430 odd, which is crazy, right? Honestly, Quant's going to be a multitude of numbers in terms of valuations over the years to come. But my point being is that, as you can see, the developed pattern after the chaos of last year, the inflation kicking in and everything else, 2022 was pretty dire really in terms of the movements of the market, right, all the way down. And you can see the trigger points as it's come down as well, as opportunities for trying to buy in, seeing a few pump ups here and there. But my point being is that there was no big support or resistance confirmations in this area of time. And this is really important to reflect upon as the markets swing around eventually. Now, I'm not suggesting that we've hit the bottom and we're finally on our way up. For sure, a cycle is very long. It can last a few years sometimes. But I think there's so many macro events in the world right now. Still, I don't feel like we're out of the recession or even maybe at the full bottom end of the recession yet. So we've got to have the argument that based on data and based on the algorithms and based on things that are going all the way around the world, that there's opportunities for verification at lower areas to confirm the new support lines. Now, we can categorically say here in July 2021, we've got a very good benchmark, and that is very much confirmed here. You can see the resistance on the way down at this very area. That's why we drew this orange line as a massive point of reference. And I still stand by this, and I'm still leaving it in there because it does literally come in. And you see this kind of, I wouldn't call it volatility, but certainly a magnetism, if you like, towards this area. So right now, we could argue that this marker of around about $19.92 is really trying to signify itself as a support mechanism. And that can only be like fully confirmed, in my opinion, and based on experience of chart analysis and trading myself for a few years now, is to come down below that level. And we've done that. Arguably, where we resisted here, it failed, but we tried it hit back here in May 2022 and it succeeded. However, it didn't really last that long. It's just under 2 months, I think, before it started pulling itself back up again. But you can see the bounce off effect on 2 occasions, arguably 3 occasions since then, even leading up to the latter stages of last year. Currently, we're seeing some really good support levels which have been matched across this border here on this fib retracement line of around $105, $106 on a number of occasions as well. So there is an argument to say that actually, how we concluded that $90 odd is a support level, and now are we looking at the $100 as a longer term achievement to then create that bigger platform for us to edge ourselves back up. But it comes back to my point about what's going on in the world, looking at people's behaviors of buying and selling, especially with the volumes, etc. And yes, Quant is an absolute powerhouse when it comes to value and the amount of money that's being thrown into this on a daily basis in and out. But we must also conclude that there's still some opportunities to grab some lower positions. Because as I said, in realistic terms, I don't still believe that $90 odd is a fully confirmed support area. So once we start breaking this $100 mark, which has been trying to be attacked on a few occasions now, even in the last few months, this could break, and then we start triggering back down to these areas and then confirming, well, actually, we need to do a couple more dips downs below, and I mean properly below this $90 mark for it to swing by. Hence why I've got these kind of areas covered with buy options at 87 and some potential lower regions back down at these levels as well, and even these markers here around $60. I do have some at these lower regions. It's probably a long shot for it to be coming back down again to $45, $46. I would love that selfishly, but it's kind of not looking possible at this moment in time. Who knows in this space, right? So I just wanted to conclude to you guys, they're the things that I'm trying to achieve with this quant, and what I'm looking out for and why I'm putting these positions in. It's not always just based on fib retracement levels, which are good guidelines to be fair, but we do have other data points to be looking at as well. And hopefully you guys, as you're doing your analysis and research, learning all these different things and learning your own anticipations and interpretations of them as well is very important. Not just to go by what other channels are doing or what I'm saying or anything like this, but just to take it all on board and see the positions that can mitigate risk opportunities. Like, you want to have as little risk as possible, right? That's why we need to be patient and really understand where we are with everything. But if you're on that short-term trading perspective, for me personally, I'm always trying to buy quant manually at different price points, even at these price points. When I talk about these lower buy points, I'm talking about like where I've got big chunks of capital being chucked in there to try and obtain those levels. But in those medium aspects of where we are currently right now, I sort of see certain areas around these kind of places where we are right now to say there's some manual opportunities to take as well. And that's when the RSIs come in. And we can see here right now, the RSI on the 14 days at 53 and the 28 days showing 48. So for me personally, I'm waiting out a few days to see if we have a bit of a bounce back down towards that maybe 105 mark again, which would probably take us back to around these kind of areas where you see it just sub or very much hitting around that 40 area. For me, 50 is a bit too high. It's very much middle ground, obviously like 0 to 100, 50 being in the middle. Just to re-emphasize that point. But the point being is that this is kind of like in that middle market. So if you are a short-term trader, you're kind of like not having huge gain amount opportunities in that area. But if it was obviously back at the sort of 30 to 40 region, you're seeing there's a good opportunity potentially for like the double opportunities or maybe even triple opportunities in that short-term period. So you see like back here, for example, you see the 37, very, very edging close to that 40 mark on the 28 day as well, edging itself back up to here where we saw on the 17th of October, you see 86 and 77. Of course you can see on the chart, but when you see it in this like identifiable data stream, you can then identify that actually, yeah, I've got some really good positions that I can sell off here based on my initial investments. And you can trade it back off knowing that you did things on a 2-week basis or a month's basis, whatever it might be. Some trade on 3 months. But I don't tend to focus on that too often until I see big spikes of, we're coming out of a bear cycle into a bull cycle. That's where I probably look at that more so. So that's just reiterated a couple of points there of the quant positions right now. So I'm just waiting for that to dip back down on the 14 days specifically around that sort of like 42 to 45 mark to start taking up some more manual positions. But we're going to keep an eye on this. Performance-wise, quant is doing quite well. 3% up on the week, 3% down on the month. And that's really good compared to a lot of assets out there, as is the 3-month trigger here. You see, referring to these at the side here. 6 months is 40% up, and year to date, 7%. There's not many assets that can boast green on a lot of those trigger points. So I'm very excited about quant in these coming years because of the development of things like CBDCs, of the infrastructure, of everything they do, and where their stance is in the whole financial system worldwide. This is a top one, guys. I love talking about it. I think it's absolutely phenomenal. Let us know what you think about it in the comments below. Let us know what you think about the analysis of the charts. What's your thoughts and theories about buying and selling right now? And let me know what you think about all the things related to CBDCs right now. What are your concerns? What are your excitements about it? And how do you think quant will be fitting into this as in addition to the things that I've mentioned in this video already? But guys, I'm going to wrap that up there. Got a few more videos to do for tomorrow before the old work week starts kicking in again. I'll try and do as many videos as possible in the week to come. But until we see you in the next one, take care and we will see you soon. Bye-bye.